an IPO for Tata Sons anytime soon? Well, that's the question lingering around the minds of all those investing in the stock markets because of the way Tata Sons, the holding company of all 29 Tata Group companies, Tata Sons seen selling the stocks of some of its biggest companies, from the biggest TCS, which led to the TCS stock tanking in market today, to companies like Tata Chemicals. Is this sell-off an attempt for Tata Sons to evade being classified as a NBFC or non-banking financial corporation by the Reserve Bank of India? Will we see a Tata Sons IPO soon? Bear in mind, it's not the first time the talk around an IPO for Tata Sons has come about. And to understand whether the talks will result in something concrete this time around, we have Dr. Srinath Sridharan, policy researcher and corporate advisor, joining us. Srinath, great to have you on the show as always. Tell us, we keep hearing these talks of Tata Sons IPO, will it happen, will it happen? All of this is happening simply because the RBI has a rule. If you are an investment company like Tata Sons, which is just 95% of Tata Sons' earnings come from dividends of the companies in which it holds stakes in, then you have to be classified as an upper layer NBFC. And once you become an upper layer NBFC, you have to become a listed public company. And Tata Group, as we know, Tata Sons as a company, we know, doesn't want to do that. It wants to be a closely, privately held company, with charitable trusts, holding control over it. What is your sense of the situation this time around?
So I think we'll have to look back at a couple of years ago, Krishna. The genesis of a lot of these holding companies is very common in Indian conglomerates. Tata Sons is at least being transparent about it because we hear it. But if you look at some of the other known family businesses, they have had in the past more than one CIC. These were all NBFCs, legacy started in the 90s, where families held different shareholdings across different NBFCs which they control, so that there was actually opaqueness in the entire structure of group ownership. But 2022 September, RBI came with a clear mandate that any NBFC which was under the CIC category, that is a core investment company category, had to be treated like a finance entity. And there were a lot of restrictions and transparency needed around risk management, including disclosures which were monthly needed. And one of the criteria was within 3 years from being identified as the upper layer CIC, they had to list. So I'm surprised that this particular topic is come about only a couple of months just before that deadline would be potentially breached. September 2025 is a deadline that Tata Sons has. And why we have seen stocks like Tata Chemicals and Tata Investment Corporation, all of them Tata Motors, because in turn they also own shares of Tata Sons. And one of the constraints that Tata Sons will need to solve for is, can they go net debt free at the Tata Sons level? And that is the reason why I see that they're selling stakes and trimming stakes in some of the group entities to bring back cash so that Tata Sons is seen as net debt free. And that is very important. And the other aspect that they need to solve for is the threshold of net assets that they own at Tata Sons level, which means that in the next few months, I also anticipate could some of the subsidiaries or shareholdings change across group companies so that Tatas can go back to RBI and say, now I don't need this because I don't breach any of those norms. So please declassify me as a CIC could be a potential if they want to avoid the IPO.
Srinath, if I can just jump in here, I just want some clarification from you. Why do you think, in your opinion and your very experienced and educated opinion, why do you think the Tata Sons Group does not really want to go public? Do they not want to share the wealth because the 25% of MPS, minimum public shareholding norm, is going to kick in? Or is there something in those books that Tata Sons does not want to make public?
So I'm being little probably imprudent here by saying that 18.4% stake in Tata Sons is held by the Mistry family. And when you're going public, a lot of those conversations are going to go public. And as a public limited entity, the Mistry family could ask for a lot more disclosures, which probably Tata Sons have not done in the past. So that could be one of the reasons why, a big motivator for them to not go public.
Okay.
All right, so you wouldn't go with the fact that, they have done this huge conglomerate of 29 companies so far so well. 66% of Tata Sons is owned by charitable trusts. At the end of the day, they would like to keep that control safe with them.
Krishna, if things were charitable and being altruism based, there is no transparency problem at all, right?
Yeah, true.
So, so that's one challenge, and two, very ironic, right? If you look at the other conglomerate where it has converted its CIC into an operating NBFC, Aditya Birla, their entire financial services holdco. A couple of weeks ago, they converted it, announced the intent to become an operating NBFC, which is very unlike what Tata's want to do.
Okay. And what we've seen today with Tata's looking at divesting stake in TCS, now are we also going to see Tata Motors, Tata Steel and other Tata Group companies also gradually see divestment of stake by the holding family?
I think so. I mean, they will have to go debt free, which means that wherever they can actually capitalize on stake sales, dividends, all of that they will have to do. That's a reality. And one of the touchy topic I think for the group is now that they've got into large capex businesses, like for example, they recently acquired Tata Consumer acquired large brands. The airline consolidation is still in the play. And more importantly, I believe one of the things that's consuming a lot more capital for them at the group level would be the Tata Digital. Their entire construct, I think they've spent over 12,000 odd crores to put together what could be India's first super app. Well, I don't think it is anywhere near an app, let alone a super app. And I think that's the challenge that Tata is going to face in the future.
Okay. And what sort of an impact, Srinath, do you feel this is going to have on the markets as we see more and more divestment coming from Tata Sons? We've seen TCS pull down the entire IT pack today, including Infosys, and that's had a major impact on both Sensex and Nifty 50. So if this divestment continues, then are we going to see more markets selling, more routes like this play out in the Indian markets? And then at what point does it stabilize?
So I don't think it's going to be seen as a route, Kartik. I mean, if Tata TCS shares typically have paid out four dividends a year, sometimes even a special dividend, for the simple fact that it was a cash cow for Tata Sons. And if this is going to continue for some more time, because Tata Sons will still continue having significant stake in TCS. So I think the retail investors will be more than happy to book profits and the other dividends. So I think we'll have to look at each of these entities. For example, how is Tata Motors going to shape up in terms of the EV play, and how much of relevance would they still have in scale? I think there is juice in each of these entities. But the large question that what is probably not spoken about is what will Tata Sons do with Tata Capital, which is another the holding company for the financial services businesses, and the equivalent for them in Aditya Birla is that particular entity became an operating NBFC. But again, the challenge is they also have a lending arm, which means they have to borrow money. So Tata Sons, if they have to cut off that leg, will they sell their financial services business and park some of the assets that they have in the life insurance and general insurance in some other space? That's a question to watch out, because it's a structural rearrangement that where they have to say that Tata Sons directly or indirectly does not have to give guarantees or own up to those debts that those entities have. And I think that's easily doable. But the intent of their financial services, if you look at the Indian financial services play, they're probably one of the laggards there, despite spending so many years in capital. Tata Financial Services has not gone anywhere. So this could be a great, I think, review time for them to think: would they want to stay invested in that, or is it a great time to use the Tata name and get out of it?
And is that going to be an opportunity for Geo Financial Services to step in and firm its game up?
Uh, Challenging for the simple fact Geo is far better digital first, and from even from the grounds up physical distribution businesses, there are far better NBFCs which probably would be cheaper and more amenable to scale than a Tata business, is my feeling.
Right, and just one last thing, you're talking about the weirdness of this entire situation. You have companies like Tata Chemicals, which own a 3% stake in Tata Sons, its parent company, and we've seen the stock of Tata Chemicals zoom up by 30% because of the value that gets unlocked if this were to be the case. And then that also fizzling out come this week, simply because of the speculation that usually goes around on whether the IPO is going to happen or not. So it's all, would you say that this time around is purely we have to wait for an official announcement from the Tata Group? Until then, everything else is speculation?
So I think, Krishna, yes. I mean, if you look at any traditional Indian business family with large business interests, they had pockets of various trusts and NBFCs and entities that held their own stakes. This is no different, and I think it is a one-time exercise that they will have to undertake to structurally clean it and say how do they govern.